incorporation. Whether an existing sole trader or a new startup, clients often ask if they should incorporate their business. To incorporate your business means that a new or existing business registers as a limited company at Companies House. It is not compulsory to be a limited company, and there are other types of company and business that might suit your situation. Many people believe that you have to be a limited company to register for VAT and payroll schemes, and this is not the case. There are many different aspects to take into account, and there's no one-size-fits-all solution, so it's important to look at your business and personal circumstances before you register. But here are some of the pros and cons of incorporating your business. 1. Financial protection. The limited company is its own legal entity and therefore separate from the people who run and own it. This means in most circumstances your personal assets and finances are protected, and should any unfortunate events happen, such as your business being sued or financial trouble. 2. The tax savings. As a shareholder director, you can decide how the profits are distributed, and this can potentially have great tax savings. Also, the company can pay into a private pension for you, and which is tax deductible expense. 3. Funding. Often, sole traders and partnerships struggle with getting funding for their business, and being a limited company can make this easier. 4. Growth and succession planning. Transferring ownership can be easier if you're a shareholder, and this can help with introducing additional shareholders, retiring, selling, or if you pass away. 5. Image. Often limited companies are seen as more professional and successful businesses, which can have its advantages with prospects and suppliers. Cons. 1. The responsibilities. There are increased responsibilities. Companies must prepare and submit annual accounts to Companies House that comply with regulations. A corporation tax return must be submitted to HMRC together with the accounts. A summary of all the company information, such as directors' names and addresses, called a confirmation statement, must be submitted annually. A people of significant control register has to be submitted regularly too, and any changes to the company information must be submitted during the year. There are also certain legal responsibilities you hold as a director, and failure to comply can result in penalties. 2. It can be more costly. There's an annual fee for the confirmation statement at Companies House, but this is only £13. But understandably, with all the additional work above, accountancy fees will often be higher. However, usually the tax savings outweigh the increase. 3. Public information. There's no legal requirements for sole traders to make business information publicly available. However, company information, such as directors' names, are on public record online at Companies House for everyone to see. This information is quite minimal though, and if you don't want anything like your address to be shown, you can pay to use registered offices. So if you want to chat to see if your business would benefit from incorporating, and we can have a discussion about your personal circumstances, then please give me a call.